The AM turn in your email box before the opening bell. This is the market recap, issue number 649. I do have something planned. 650th issue. Probably noticed I've been working on a YouTube channel, and a few folks have subscribed, and I appreciate that. Need some more folks to subscribe. Looking to move things over to YouTube and doing something interesting on that. We're looking at for Monday. I definitely need to update that. It should be Tuesday, April the 3rd. So there you go. Today we're going to talk about how we can get a better read on when we might want to flip the cycle. Now, I had it right. Well, there's nothing right or wrong. Monday, even though it didn't look right, and the reason that I changed it to a bearish side, for a couple of reasons, but for the most part, we really didn't have enough movement within the cycle to get a real good feel which direction it was going to be, and I'm still skeptical. We're seeing shortening the upward thrusts, not the best. Not the best that you'd want to see. My goal is to help the intraday scalp trader level up. Extend your average hold time in a trade while increasing their potential profits by using WB's timing or the hidden internal Emini clock. Clock that controls all turns today, every day, and today may have been somewhat of a confusing situation because if you look at the Wyckoff Wave, look at the Dow, probably would have saw what I seen, and it was definitely more of a bearish, or at least they weren't coming in and selling stronger, but to me, it had hints of a bearish tone. Today we're looking at an S1L day, and that's why I do not get all bent out of shape on if it's going to be a high or low, because we really need to let price tell us what it has in mind. Could have been an S1H day. It's more important to nail that keepy day, which would be tomorrow, which would be the last turn or turn two. And of course, the Wyckoff Principles, supply, demand, cause and effect, effort versus result. What makes me different? No MACDs, no stochastic, no moving average crossovers. These are called lagging indicators. Nothing lagging about price. Pure price action, pure price behavior. Just the interaction of price, volume, and time, the X, Y, and the Z. As Jesse Livermore said, cut your losses short and let your profits run. In most good market principles, that's what I'm an expert. I trade only one financial instrument. I do one thing and I do it well. I trade the Emini Futures contract. Been trading for the past 13 plus years with consistency and without fear. Now I'm a trader first, old school market principles educator second, and levels you can trust everyday supplier third. Now ideally we look for a 2 to 4 point range or a fade, and we're getting closer to that. You can see we had more of an ideal extreme volatile day as it was before the decline, and actually I saw hints of today that mirrored the days before the decline, say February the 10th or so. A little bit of a shortening up the thrust. Define your risk, execute the trade, and have a plan for taking profit. Let's go ahead and get to the display. You determine trade size, when, where, how you trade. CFTC Futures is not for everyone. It's a volatile, complex, and risky business. Before you invest, know how much you can afford to lose. Look at the previous day. And we went with the normal, and actually it was a Monday. Looks like I put that on the wrong side. S4H normal's where that should have been. All right. This day had a bit of a challenge because you were trading within the previous range. Obviously, for the low, it came in at 11 o'clock. And of course, we ended the day on a good note on increasing volume, which would imply today might be a little bit more stronger. So look at today's numbers. We can see where it opened up on the Globex sat point at 27.59, putting a high of 28.08, and that was pretty much the line where everybody was looking at. I was looking a little bit higher, 28.19, 28.08. Put in a low of 27.52. And of course, we had the last, we're going into opening print was 28.03. These were the daily pivots. Sometimes they're going to be more effective. good news, but it's all about the virus. And we've already put in the low, like I said, on March the 3rd, so a little bit skeptical. Now we're getting closer, and we'll talk about that in just a minute. Like I said, we did have an opportunity, and this came in at the very last moment, so you might have gotten short there also. But for the most part, you got a little bit of heat taken on that one, or you'd come in and taking it out on that test of that sign of strength that we talked about right here. When you have that strong, extreme bullish trend up, you definitely want to be careful and not get yourself caught in the middle. Now, I decided to go ahead and add this. It actually increased when I was working on the newsletter. That's all I can say. Like I said, we had the preliminary support, that gap down on the spring, and then that test. That's where all your big boys got in. That's where all the institutions, all the professionals got in, was on that test that spring on March the 23rd. That's when they didn't look back and was nothing but net all the way straight home to grandma's house. And like I said, I am working on a YouTube video. We're looking to do a couple of things on YouTube. And, of course, keep WB's work private, but get more folks involved in what Wyckoff had going on. I went ahead and included this. You can see in the Dow 30 how we ended up, for the most part, very strong. 5%, 4%, 2%, 4%. A little bit mixed. I would be minus 2%. Minus 2%, minus 4%, not the strongest amount we would have wanted. So like I said, go ahead and click on that. If you get a chance, subscribe to the channel, because that's where we're going to put in a lot of information over on YouTube. I was surprised we did get a little bit further, but here's the takeaway. The halfback, we were already above the halfback, and right now we're looking at 28.26. And like I said, some institutions were buying. As I said earlier, they were trying to encourage the younger bulls to get back into the crowd. Not that they were going to sell to them, but it's just kind of what they were looking to do. It was bullish coming in for the news, as you can easily see. Everything was looking very positive, and they're still counter-virus driven. Europeans were closed Monday, so obviously they had their opportunity to get on board. And of course, they were saying, words like the worst is over. 119,000, 23 deaths. Trump's got everybody on the edge, anticipating when we're going to get the country jump started again. Infections in several countries are taken as the end of the tunnel. You might want to think about this. Let's see. Yeah, tomorrow, which would be today, everybody should start to get that check in the mail. But obviously, there is no mail. It's going to be automatically deposited into their bank account. I think that's why he's wanting to get the economy jump started, so they can start spending that money, either paying on the bills that they need to get caught up on. Goodness knows if they're going to gamble with it or do crazy things with it, but hopefully everyone will be paying off their bills and getting ahead on where they need to be. So that might be another reason why he wants to jumpstart the economy and timing it to the introduction of the stimulus checks. It's not a stimulus checks. It's just, I think they called it a future return on next week's taxes, or next year's taxes. All right. Here's what I was saying about the Wyckoff Wave. We had an up move for 50 minutes and then a strong down push for 50 minutes. Now you can obviously see as we're nearing the top, volume itself is pushing down. It's pulling back. Effort versus result. The result is price. And the effort, obviously, is volume. Now you can see as we're coming up to the highs, volume's pulling back. You get a bit of a spike here, starts rounding over, coming out. Okay, so obviously the effort was lagging the result. That would indicate a potential top. Up for 50 minutes, down for 50 minutes. So once again, we've made a major movement down. So the best you could look for is the halfback of this particular move down, which would have been the top. Now, a little bit longer on the downside on the selling pressure, 60 minutes as opposed to 50 minutes. But the price obviously was not, the extended price was not able to push down. Little climax comes in with a bid, moves it up 40 minutes. So what do you see? 50 minutes here, 40 minutes here. The bullish pressure is starting to wane, starting to pull away. That should be, I'll get that right in editing. Should be out in 20 minutes. So we can still see that they're not willing for price to fall apart as it was in the previous down wave. It's taken twice as long, but yet price was unable to push down. And then, of course, we rallied up for 40 minutes. So like I said, this is not a bullish story. And it could obviously change. But on the last 5 minutes, we see a lot of volume coming in. This price is pulling down. Well, that's why I was saying I felt it was more bearish, because from the Wyckoff Wave standpoint, there's not a bullish story. There's more pressure on the market. Holding it, so we'll see. Is it potential preliminary support, a supply? Yeah, we'll just have to give it some more time and see. Price is climbing that wall of worry, and that's the major thing. It could go a long ways before common sense starts entering back into the market. But it's all contra-virus driven. That's the real takeaway. What moves the market? Number one mistake most traders make is to step back and wait for the market to prove them right. So they should be already willing and able to let the market prove them wrong. Equality is essential to the equipment of a speculator, trader, investor, or judgment. Self-reliance, courage, prudence, and pliability. These should be added to quality and patience. And brief. Rigid self-control is half the battle. You must train yourself to act upon your decisions and carry them to a successful conclusion. Operate with no emotions. Be indifferent to each trade's outcome. Be willing to let the market prove you wrong. And with that, as always, be nimble and be quick. Don't let the market make you